Welcome to Southwest Florida Real Estate Update, hosted by area realtor Jim York and York Real Estate Group of Downing Fry Realty. Our show will bring you the most up-to-date information about the local real estate market, featuring leading experts in the real estate field.
Good afternoon. I'm Michael York with the York Real Estate Group, and welcome to the Southwest Florida Real Estate Update. I'm joined today by my father, Jim York, and his guest, Fran Lord, branch manager at Summit Mortgage.
Welcome to our show. Thank you, Michael, for our introduction here. Fran, I'm glad you came to the show today.
I greatly appreciate the invitation.
So I don't know really a lot about your company, so maybe let's start with yourself.
Okay. Well, I've been in the mortgage business since 1985. I'm a graduate of Denison University. I grew up in Philadelphia, then moved to Boston, where I was in the mortgage business from 1985 to 1995, and then I moved to Naples in 95 and started basically Summit Mortgage Company. So I've been down here for quite a while. Summit Mortgage Company is an independent mortgage banker. We're not a broker, we're an actual bankers, which means basically that we do fund and approve all our own loans. So I've got a long history. I've 30 years this year in the mortgage banking business.
In broker and bank, you approve all your loans. That's the difference?
Yeah, that's the primary. The big difference between a broker and a banker is that we actually, not only do we approve them, but we also fund them.
Okay.
A broker, basically, what they would do is take a credit package and submit it to a lender like ourselves for us to look at, and then we would close it in our name versus the broker. They don't fund any of their own mortgages. The broker model is basically, with all the new regulation, is basically almost non-existent in today's market.
Is it really?
Correct, yeah.
Okay. And where's your offices located?
My office is on Panther Lane, 1415 Panther Lane in North Naples.
Mm-hmm. In your association with Downing Fry, could you just elaborate on that a little bit?
I think this is our 11th year. We've had an affiliation with, I met David Fry about 12 years ago, mm-hmm. and we had a lot of common interest in the same basic philosophy in regards to, he had always had some type of mortgage company within the business
mm-hmm.
for multiple years, but what he was looking was for more of a service-oriented organization within Downing Fry to basically help out the real estate agents, and basically through education and then also providing a quality mortgage product to their agents. So we joined forces, I'd say 11 years ago. Downing Fry represents maybe 10 or 15% of our business in Naples. I have 3 gentlemen that work within the Downing Fry organization. Will Dukes, Jonathan Schulman work in the downtown Naples office, and Mark McCabe actually operates out of the Downing Fry office in Bonita.
Okay.
But it's been a great affiliation. David was, I'd say probably of any mortgage company with any of the local real estate companies, we have the longest tenure, and I think it's a credit to Summit and Downing Fry as a whole, in the sense that they really recognize the value that we bring to the table. It's been a great affiliation.
Mm-hmm. On Panther Lane, who do you have there?
That's basically where all my operations staff is.
Right.
So it consists of right now about 14 people.
Okay.
Which is basically our processing, underwriting, and then there's a couple other salespeople also that work in the building.
And okay, Fran, let's the feds. Okay, we're always talking about the feds upping the rate or whatever they're doing. How do they determine that?
Well, it's an interesting question. I don't think a lot of people realize we're basically in a 30-year bull market in bonds,
mm-hmm.
with a couple instances where there's been some up and downs, but in general, it's been a bull market in bonds. What basically the Federal Reserve does do is they take a look at the overall economy, and they make their judgments based on economic activity, inflation, and employment. They're the 3 major components that they're looking at. We've been in a non-inflationary environment primarily because of the technologically driven productivity in the economy.
Mm-hmm.
There has been very little inflation over the last, really now. If you really go back to it, and I started, and I sit back and think about this often. I started in 1985, and that year rates were 12%, which everybody was so ecstatic about because they had come down from 20%.
That's right, yeah.
A year later in 86, we broke 10%, and that was like, I've never seen so much business in my life. I mean, it was like monumental.
Mm-hmm.
Well, for the last basically, really if you look now for the last 5 years, we've been looking at a 30-year fixed rate mortgage in the three range.
That's right.
Anywhere between basically 3 1/4 and 3 7/8, and it's been a long time. Now we can argue why the economy is having a hard time really generating any real growth. We could some people think it's somewhat political, but you could have a long discussion. But the economy right now is only generating, matter of fact, the first quarter of this year was only 0.5%, so which is very anemic growth. So you've got a 10-year Treasury bond right now yields roughly, actually went up yesterday, but it's still yielding under 2%, 185 I think I saw yesterday. And you still have a 30-year fixed rate at 3.75. So, you know, the Fed's talked about raising rates. They raised them one time already, the Fed funds rate. Had negligible impact. A lot of people thought mortgage rates were going to go up. It actually was the opposite. The yield curve actually flattened. I don't want to get too technical, but when you see a flat yield curve like that, mortgage rates are more tied to the 10-year Treasury. A lot of people think, oh, the Fed's going to hike rates next week. Mortgage rates are going to go up.
Right.
That's not necessarily the case. It depends on what happens on the curve. And if any of your listeners really want to follow mortgage rates, just in general, follow the 10-year Treasury. That'll give you your best indicator of where mortgage backs are going to trade. And a lot of people say, why the 10-year? The average life of a 30-year mortgage is only about 7.5 years.
That's right.
People don't recognize that. They think it's these very few of these mortgages stay on the book for 30 years. People will either refinance, take equity out, move, or a lot of different things. But it's been a very benign interest rate environment really now for the last 10 years. You know, we can go back to the economic crisis in '08, but in general, it's been very, very benign. And it's been a big benefit to real estate. I mean, real estate has, it basically reinflated,
Right.
I would say somewhat reinflated the market.
Exactly. Fran, we're going to take a little short break, and we're going to be back 1 minute, and we're going to talk about rates, where you see rates headed, okay?
Sounds good.
Thank you.
When picking a realtor, don't just pick anyone. Pick someone with experience. Pick someone with a proven track record. Pick a realtor like Jim York from Downing Fry Realty, the #1 brokerage with the most real estate transactions in the area.
My husband and I had very specific ideas about what we wanted in our new home. Jim York was able to help us find the home that was ideal for us.
With over 20 years of real estate experience in Southwest Florida, Jim York has negotiated over $200 million in sales contracts. Selecting the right realtor is a critical decision that can earn you thousands when selling or save you thousands when buying.
Jim also helped us with a mortgage lender and a good real estate attorney. He went that extra mile, and his experience says it all.
Call Jim York for a no-obligation meeting at 239-273-6727 or visit his website, www.naplesyorkrealestate.com.
Welcome back. Fran, let's continue this conversation. Where do you see interest rates going? Because I think in election year, usually they don't try and bump them too much, right?
Yeah, they don't. I think yesterday there was some news that the Fed basically said that June is on the table for a possible Fed fund increase. So we'll see. But I would think, to be honest, over the long haul, obviously every eighth matters, but I don't see rates really going anywhere. I'll be honest here, over the next couple of years, unless the economy really starts to generate real growth with real inflation. You're probably still going to look at a 30-year fix anywhere between 3.5% and 4.5%. So I think it's going to be fairly benign. I don't think anybody's predicting that we're going to get a rapid rise in interest rates of any sort. So I'd say it's pretty steady as it goes. But just in general, I mean, I would say, over the course of the next time, it wouldn't surprise me if we saw the 30-year go back to 4%. But then again, they're low.
Yeah, it's not that bad. It's not bad. Let's start for our viewers. Maybe when they come to you, or really when they come to me, I recommend people that they should go to, because I want a pre-qualification letter. Maybe you could just shortly describe what difference between how you look at a pre-qualification letter or a pre-approval letter.
We get this question a lot, and it's a very good question. Obviously, a real estate agent they want to know that you're actually qualified to purchase a home before they spend all the time, and because there's obviously a lot involved in purchasing a home. So you're going to look at a lot of homes. So what a lot of agents will do is have you call a lender, and they'll give us a call, and we will actually at that point go through basically really the what I would almost say the underwriting process. And we're going to ask them, we'll do actually run a credit report on them. We'll ask them all the pertinent questions in regards to what it takes to purchase a home, how much money they have. We'll actually look at bank statements, depending on what line of work they're in. If they're self-employed, we're going to obviously go through their tax returns with them. If they're a salary position, we'll just take a look at their pay stub. But we literally have them prepared that when they go out with the real estate agent, they're just like a cash buyer. And it's very important for the real estate agent to to do this ahead of time, because literally, particularly in the Naples market, I think roughly, I know last year I think it was roughly 50% of all the transactions were cash.
That's right.
And with everything that happened in the mortgage industry over the last basically 10 years with all the regulation, a lot of people believe getting a mortgage is like going to the dentist.
Right.
But it really doesn't have to be that way. And I think you'd find the vast majority of our clients, they really appreciate the pre-approval process. So therefore, when you go to find a house with them and they find something and you come back to me and say, hey, Fran, can we close in 30 days? We said, absolutely no problem at all. So we feel like we're basically preparing the person that's getting the mortgage to compete with any type of cash buyer. But we do look at their finances closely. It's not superficial. You can actually take it to the bank. So if we basically tell you at that point they're good to go, they're good to go. And we're going to give you, we'll give you a range.
Right,
yeah,
exactly.
where they belong. And then we're also going to discuss the client's comfort level. A lot of times, we deal, particularly in the Naples area, we have a wide variety of clients. You have first-time home buyers, and you could have the CEO of Exxon. So it's a wide variety, and they all have different needs. So it's our job to basically share our knowledge and then get them prepared to go out and look at property.
So you kind of answered one of my other questions. 30, 45 days closing from start to finish after you have the contract?
Yeah, I'd say 30. We like 30 days. I mean, I'll be honest with you, we just closed something the other day in 17 days. So we're going to do whatever we need to do. Again, when you come down, typically 30 days, everybody is very accepting of 30 days, because a seller, they're not taking their house off the market for a long period of time. So most people are very accepting of that period of time. And even most cash deals usually are anywhere from 3 weeks to 30 days. So, that's basically 30 days is more than enough time. But again, particularly at Summit, because we are really a service-driven company, if you can negotiate a better deal and you need even a quicker close, we'll make it happen. If we tell you it's going to happen, it will happen.
It will happen. Okay, the next question I'd like to do is let's just step through the different type of mortgages that are available, because I think in the last year some have opened up a little bit more than they were a little stricter after the downturn. So maybe a first-time home buyer that's coming to you, let's start with a first-time home buyer. What kind of programs do you offer for them?
What's kind of interesting, the mortgage business is it's back to where we were in 1985 when I started.
Right.
It's like,
that's right.
We're kind of doing it the right way again. But there's a lot of product for the first-time home buyer. I mean, we obviously offer FHA product, which has been around since the dawn of time.
Right.
And what's important for your listeners to know, particularly other real estate agents as well, is FHA it's simple. A lot of people think, the appraisal's different, there's more requirements. There's not. It allows for a lower down payment, lower credit score. But it's designed really for the first-time home buyer. And we write it, quite a bit of it here in Collier County with the first-time home buyers.
It's 3% or 3.5%?
3.5%.
3.5%.
And it's simple though. The underwriting turn time is exactly the same. I mean, you can close in anywhere from 21 to 30 days. And again, we do all this in-house.
That's right.
So it's important. So you have FHA. Fannie Mae and Freddie Mac have now come back. You guys have probably heard the words before. They're the two quasi-government agencies that guarantee a lot of mortgages, but they've come out with a 3% down. They will allow for 3% down. They do require a little bit of a higher credit score and a little tighter qualifying ratios, but it is readily available at 3%. You also have in Collier County, we don't participate in it, but it's available. There's a bond program where the county will basically give down payment assistance to first-time home buyers, so that's readily available.
Is that up to $7,500 or $10,000?
Yeah, it's up to $10,000.
$10,000.
There are income limitations by the borrower. Also, believe it or not, Collier County it's interesting. Collier County is considered rural, even though it doesn't look rural, particularly in season. But the USDA offers a 100% financing program, a lot of people do use it. And they'll go up to 100%, but again, they do have certain limitations as well.
So I'm familiar with some of these programs, or really all of them, but the USDA would have to more or less be a single-family home, right?
Correct.
And then the FHA, if they were trying to purchase a condo, that condo building would have to be approved by FHA, right?
Correct. I mean, FHA primarily in Collier County is for single-family homes.
Right.
There's a handful of buildings that actually have condos. There's a handful of condos that actually have FHA approval already in place. It doesn't prohibit an association from going for an FHA approval, but in general, when you're out showing client, and again, this is one of the services that we provide. You know, if you said to me, hey, my client needs to go FHA, they had a lower credit score, maybe some higher ratios and limited amount of money, we may say, okay, well, here are the only buildings that are actually eligible at this point, and we can actually give you a list of those buildings.
Okay. How about the new Freddie Mac and Fannie Mae? Are they fall into that same classification with the condos?
No, with condominiums, it's the same warranty that
3%.
You can put 3% down, but they do what we call full condo warranty. So we are looking at billing. This is important too.
Right.
It's important for your client. It's not just us as the lender.
Right.
Your client would like, you know, we're going to look at delinquency rates of the condo association. We're making sure that the condominium association is properly reserving for any type of improvements.
Repairs, right.
Yeah, repairs that over time. So we do a full approval. We're also going to look at owner occupancy level and second home clients in the association versus all investors. You know, if there's all investors in the building, it's considered more risky than if there's, you know, an equal split. But most buildings are in good health in Cuyahoga County. I mean, actually, they all are.
Right.
Very, very few. We have very few problems at this point. Management companies have kind of gotten on board understanding what the guidelines are, so they're properly advising most homeowners associations. So there's plenty of product out there. There's no shortage of product. The only difference is, and it's for a lot of the people, which I always thought was crazy, that we're looking for all the stated income and all those crazy things.
Right.
That's basically gone. But if you've got a legitimate job and you're working, there's plenty of mortgage money available. So it's actually very easy to get a mortgage. It's not nearly as difficult as what most people believe.
That's right.
If you're dealing with a legitimate lending institution with a qualified loan officer, it's actually very simple.
Fran, we're going to take a little short break here, and we're going to come back and talk about conventional mortgages. We'll be right back.
Okay.
Thinking of buying or selling a home in Naples, Marco, Bonita, or Estero, Florida? Think of the most experienced York Real Estate Group associated with the #1 brokerage in Naples, Downing Fry Realty, which produced $1.9 billion in sales in 2014, controlling 43% of all transactions in Naples. Jim, Michael, and Morgan York make up the York Real Estate Group of Downing Fry Realty. With over $250 million in sales transactions, they can offer you the expertise and trust you want and need in a realtor. Call them today at 239-273-6727 or visit their website, www.naplesyorkrealestate.com.
Welcome back. Fran, let's go into conventional mortgages, which is a regular person that wants to put 20% down. Maybe explain to our viewers how those programs work, or if they want to put 50% down.
Right, and actually the quality of the customers in general down here it's a very high quality customer. We have a lot of people that put a significant amount of money down. But the word conventional doesn't necessarily mean 20% down. What it means is, it's basically, conventional means Fannie Mae and Freddie Mac.
Okay.
So they're the two basically quasi-government agencies that basically guarantee mortgages for banks. They have, when we say conventional, also the other thing that's important is that the loan limit, there's a loan limit established by Fannie Mae and Freddie Mac, and they have a limit by county, and they have a national, they also have a national limit.
Right.
The national limit is $417,000. For high cost areas, and Cuyahoga County is considered high cost, they will guarantee mortgages all the way up to $448,000. So if you go above $448,000, it then becomes a jumbo mortgage.
Okay.
But sticking with conventional mortgage, if you put down 20% or more, there's no mortgage insurance. So that would be the main advantage. Today, a conventional 30-year fixed rate mortgage is running roughly 3.75%. At 15 years at 3.125%. There's good ARM products available as well. One of the products that I see written quite a bit in today's market is a 7/1 ARM. So not to get, I don't know if your listeners will know what a 7/1 ARM is. It's still a 30-year mortgage.
Right, it is.
But the interest rate is set for the first 7 years. So if you go back to our earlier conversation, when we talk about the average life of a loan, it's really anywhere from 7 to 9 years. The 7/1 makes a lot of sense, because if the 30-year fixed rate is 3.75 and you can get a 7/1 ARM at 3.25, that's a big difference. So 7 years, you got a 0.5% below.
Right.
So not all variables are risky. A lot of people, matter of fact, I'll be honest with you, the people that have had variables over the last basically 20 years have been the big winners. But again, they all fall under the conventional heading. But again, so once you get over $448,000 in Cuyahoga County in the Naples area, it then becomes a jumbo mortgage. Lee County, it's $417,000. So anything over $417,000 then becomes a jumbo mortgage.
Let me step back 1 minute. Explain to our viewers what PMI is, okay?
PMI is the words. It's private mortgage insurance,
Right.
and basically what it does is it guarantees the bank. It gives us coverage because again, it's a higher risk loan.
Right.
So if you put 5% down, they basically insure the other 15% to us as the lender in case of default.
Right.
So and again, mortgage insurance, the price of the insurance is based on the amount of down payment, the borrower's credit score, and in some instances, the actual ratios, the debt to income ratios.
Okay.
Sometimes will come into play as well. But private mortgage insurance is it's common, it's easy. It's not nearly as scary as everybody thinks. And a lot of people don't have the ability to put 20% down,
That's right.
particularly the people that are getting started for the first time. But like I said, in general, like I said, let's just put it this way. You can go all the way down to 3% on a conventional mortgage with Fannie Mae and Freddie Mac, and mortgage insurance is available.
Okay, and then jumbo, when a person does a jumbo mortgage, just explain that to them. Is there different criteria for jumbo mortgages, down payments, or
there is.
Rates a little higher, right?
Yeah, in general, a jumbo mortgage, you're going to be putting a minimum of 20% down. Now, without getting real technical,
Right.
down payment sometimes is determined by the use of the home. Is it a primary residence or is it a second home? Is it a condominium or is it a single family home?
Right.
So, but in general, I'd say 95% of all people getting jumbo mortgages are putting a minimum of 20% down. And again, our jumbo product, we have product that goes all the way up to $3 million. There's, we consider it anything over $3 million. We call it a super jumbo, and that money is readily available as well. A lot of the people that are getting those type of mortgages are getting it through wealth advisors. But the jumbo market is readily available, and the rates in the past had been, usually we're running anywhere from 1/4 to 3/8% higher than conventional. In today's market, there really is very little difference. And the reason being, again, I don't want to get technical, but Fannie Mae and Freddie Mac have what we call guarantee fees, and they've risen their guarantee fees as the years have gone on. Remember, jumbo mortgages are not guaranteed by Fannie Mae and Freddie Mac. They're still secondary mortgage market loans, but basically the pricing today, because they don't have the same Fannie or Freddie guarantees, it actually is very similar. In some instances, I've actually seen over the last year, sometimes the 30-year fixed in the jumbo market is actually lower than the conventional. It's happened quite a few times.
We have time here. Let's just go over about investment properties. What the criteria is for investment properties? And
investment properties, it's good. Another good question. Investment properties, you're really talking about a conventional mortgage then. So basically the minimum down payment requirement with Fannie Mae and Freddie Mac is 15%. 15%, and you would have mortgage insurance because it's less than 20.
Right.
But, and again, in the jumbo arena, we have none, and I know of no product in today's market where you can get a jumbo mortgage for an investment property. If you wanted to go that route, you'd probably go to one of your local savings banks, and they would write it up more as a commercial loan if it's a jumbo. But conventionally, you can go all the way to 448 in Collier County, and again, with a minimum down payment of 15%.
And if you put 20% down, you wouldn't have PMI?
No mortgage insurance, correct.
On an investment
Right.
property.
And the only thing to keep in mind when you're buying investment property, the interest rate is a little bit higher. You're roughly 3/8% higher, and that's primarily for the risk factor. But keep in mind also when you buy investment property, we also give you credit for any type of rental income that the house could produce.
Right.
So it's kind of interesting. A lot of people don't feel like they would qualify, but they actually do, because they forget about the fact that we do give them credit for what the market rent would be for that particular unit.
Do you take the full amount or a percentage of it?
Basically, it's 75%.
75%.
We use a vacancy factor and an expense ratio of roughly 25%.
How about land? Do you do land?
We don't do raw land. Again, we don't. It's available. It's going to be more typical to one of your local banks. Your big banks, none that I know of are in the land business these days, but a lot of your local savings banks, again, it's a portfolio product in the bank, so when the bank actually makes the loan, they're keeping the mortgage, but it is readily available. Just it's similar, most of your smaller banks are the ones that are actively involved in land and construction. They'll do construction loans as well. We currently are not doing construction loans.
Okay, that was my next question.
Yeah.
Well, Fran, I think we've covered a lot for our viewers, and I appreciate you coming on, and I appreciate even really learning a lot about your company and hopefully we can do some business together.
I appreciate it very much. I think what you're doing is great. I think these type of segments are great for not only the consumer but for real estate agents in general. But the market's healthy, and the only other thing I leave all your listeners with is I feel good about the market based on demographics and the amount of cash that's in the marketplace. There's not a lot of leverage in the system at this point, so the market looks good, and I'm optimistic about the future.
Thank you. Thank you for coming on.
All right, thanks.
Thank you.